Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets. New York coffee. I have in recent weeks been away attending technical analysis conferences, so have come back to look at coffee with new eyes. Thus we have a continuation actually. There's not actually much new, but the continuation of the resultant move lower from the February to June diamond pattern, though with some recent odd idiosyncrasy, shall we say. The primary target for a move down from the diamond pattern was down in the 156.35 zone, which prices achieved in mid-August. This left the secondary harder to reach target X1 down in the 141.80 zone, just below a small bank of congestion between 142.45 to 143.35, based around the September 2017 high at 143.35 and the 2019 high at 142.95. Though we have, overall, been moving lower. There have been a pair of interesting bullish patterns in September and now October. These consist of the weekly key reversals up in mid-September, as well as last week's weekly key reversal up. The earlier September one caused a rally that eventually ran out of steam, a little short of the declining medium moving average, currently at 160.40. Additionally, the declining short medium moving average, currently 153.60, seems to have played a part in eroding away the bullish incentive. It seems the same short medium moving average is also eroding away the current rally, and with the medium moving average significantly lower today compared to September, I'm beginning to wonder how much of a rally we may see from last week's weekly key reversal up, and whether target X1 at 141.80 may be seen sooner than later. London coffee. Last time I started looking for alternative patterns after such a rapid move lower in late June. I decided upon a possible bump and run reversal top. This fitted in with the concentrated action and subsequent fall. Thus I had an initial target X in the vicinity of the April highs and May lows around the congestion at 24.11 and the lesser Fibonacci line at 23.95. I then suggested a secondary, harder, much harder, potential target X1 around the highs of late February and early March at about the lesser Fibonacci line at 22.03. In mid-August, the market dipped down and reached target X at 24.11, and at the same time threatened the descending wedge pattern, currently at 22.67 to 23.43, that is highlighted on my daily chart in dark blue. Now the pattern was repaired, but in mid-September there was another breach, this time on the top side, and last week another breach now on the downside. I am wondering as to the integrity of the descending wedge pattern after all these false breaks in both directions, but for now I'll still keep target X1 at 22.03 on my daily chart. It may be that this descending wedge pattern could be morphing into another pattern, such as a bear channel, which I've roughly outlined on my daily chart, but it is still early on for such an idea. Just bear in mind that below target X1 we have a congestion band between 21.53 to 21.77 with lots of highs from 2017 mixed in there as supports. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.